All righty. Good morning, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Hope everybody made it here okay. Obviously, if you didn't make it here okay, you didn't make it. And I'm talking to you and you're not even here anyway. So that doesn't make a whole lot of sense. But, it's as I mentioned earlier on the F.A.C.E webinar, it's this time of year, this week, it's really screwed up. A lot of European traders, because of the time change, they can't attend, or maybe they forgot that there's a time change this weekend, but we're not affected here in the U.S. So, they go to log in to the F.A.C.E webinar, and they're like, "Oh crap, it's the Morning Edge right now," or they go to log in the Morning Edge and realize it was an hour earlier, and it happens every year, because we all live in our own world, right? In the real world, our own world, even though it's the real world. And so when time changes for us in our actual physical world, we're not always cognizant that it's happening, or it may or may not be happening in other places. So anyway, Dom says you just have a routine these weeks and it just messes it up. That's right. It does. I mean, that's the thing, is everybody has like a routine, and the routine will be back to normal next week, but it's the 1 week of chaos that we have. So it's one of those weird things. Anyway, let's get into, sorry, for me. Okay, so I gotta confess something to you guys. I'm gonna confess something to you. On the week ahead video, I bear with me for like 1 minute here. Well, as we're waiting for people anyway. But on the week ahead video, it was Saturday. It was Saturday evening. I had so much to do Saturday. Taking kids around everywhere. My kids were like needed to be shuttled all over the place, and it's Saturday night. Both my kids are gone. One kid's staying the night at one friend's house. The other kid's staying the night at the other friend's house. And it was Saturday night, even though Halloween was actually last night, which is Sunday night. It was Saturday night. I was actually filming the week ahead video. And I said on the week ahead video, I'm like, yeah, I'm going to have trick-or-treaters coming over to my house soon. So I gotta wrap this thing up. And I honestly thought trick-or-treaters were coming on Saturday night. I scrambled to the store, got a bunch of chocolate, yada, yada, yada. My wife is like, I got everything ready. And my wife's like, what are you doing? And I'm like, we're going to have trick-or-treaters over here shortly. And she's like, no, they're coming Sunday on actual Halloween. And I'm like, you always think like, oh, if Halloween's on any time on the weekend, let's call it Friday or Saturday, that Saturday is going to be or on Sunday, Saturday is going to be the day that everybody celebrates, which is true of parties, but not necessarily trick-or-treating. And so I was totally like caught off guard. And I was really depressed too, because this is really my first year as a parent. How many of you guys are parents? Yeah. How many of you got, and you can jump in the chat and the chat. How many of you are parents? Hey, Stelios says I am. Of course you are, Stel. Well, this is the first year that my kids were not around for trick-or-treating. Tom said, yeah, mine is 43. So like, Tom, what you've been through what I am going through. It is really depressing as a parent when you spent, from the time my kid, I'm talking 17 years, right? So when my kid was a few months old, we put a little costume on him and towed him around the neighborhood 17 years ago to this year. It's the end of an era. Both my kids are gone. And we've dressed them up and, walked them around neighborhoods and got buckets of candy, and they get to, share with the kids and, hang out with other kids. And this is the first year my kids have really been not here and wanting to be somewhere else. And it was actually very depressing. I'm admittedly telling you guys that it's depressing as a parent. Depressing because I really enjoyed those times and I just wish they weren't over. You know what I mean? So Tom says, yeah, I get to eat the chocolate now. So that was my other part of the story. And then we're going to get started because I wanted to give everybody a few minutes to get here that was running late. And I think we got most people here now. But one of the other things that I did last night is that the kids, we actually went through 4 bags of chocolate candies. But when I say chocolate candies, I don't give the cheap stuff. I give the good stuff. Kids come by my house and they know they're getting the good stuff. That's the kind of house that I want to make sure that my kids, that the neighbor kids know that they're not going to go get bubble gum at the Morrow house. They're going to get the good stuff. So they got the good chocolates, right? So the thing is we went through like 3 bags of chocolate last night, but there's chocolate left over. And so I ate chocolate last night. I ate a few pieces and I ate it too late because it was, I had a hard time getting to sleep last night. So Brand says, oh, you're the house where kids hit you up twice. Yeah, of course. Of course. Yeah, we get the good stuff. Kids are coming over to our house getting Reese's peanut butter cups and, all sorts of the good chocolates. Anyway, all right. Enough about that. But I wanted to give you guys that little story because it was funny because I was scrambling around during the week ahead video. I'm like, okay, I got to wrap up the week ahead video because kids are going to be at my house anytime now. Because I really thought they were. And I ran to the store, ran back, got all this candy, got it all out. My wife was like, what are you doing? And I'm like, God, the trick-or-treaters. And she's like, no, they're going to come tomorrow night. I'm like, oh. Like, well, I guess I'll just have a beer then. So that was it. So Stelios, enjoy those little girls while you can and do all the fun stuff.
Man,
And
you bummed me out now.
it was well, you got years. I don't.
Yeah, I know.
You got years with them. I really was like, I was stunned how bummed out I was actually. A lot of people always talk about, I can't wait for my kids to get out of the house. And I am the exact polar opposite. I'm really dreading, but they have to. I mean, they have to. It's not like oh, maybe we can make that not happen. No, they have to. All right. So anyway, let's start with the euro dollar. So obviously the euro is going to bounce back with risk. Now we were just having this conversation in the chat room. And I want to talk to you guys about this conversation because it was really important. Stocks were rallying. They've come off a few points, right? And by the way, I did put in a pattern in play, counter trend pattern in play for those of you. Oh, Andre just put in a S&P 500 crab reversal as well. So I put in a S&P reversal here at 46.25 because you guys knew I was looking for that, right? I mean, inverted head and shoulder pattern, 127% extension. And so I figured, this should stall the advance. It's November 1st, first day of the month, the market's up. And, usually we end up bid up Monday, first day of the month, and then hopefully we'll get a little bit of a reversal after that. And I'm not looking for a lot. I'm just looking for a move back down to here for now, right? But the reason why I pointed this out is because we were talking about the FX markets just not moving right now, and it's because, and I put that the market's in a very bullish trend. When I say the market, I'm talking about stocks. Obviously stocks are in a very bullish trend. So it's going to take more than just a 10-point S&P pullback to really get the FX market's attention. The FX market's probably looking at, this little 10-point pullback saying, well, in the grand scheme of things, does it really matter? And which is, I think it's a fair point for right now. In order for the FX market to really take notice of stocks, under some pressure, I think we'd have to move below this level right here, which is 4,600, as you guys knew was big support from last week. So I'll write down 40. Oops, going back to the S&P here. Sorry, 45.50. That's key, right? But 4,600 will be support today. I'll write down today's highs, which we'll just go with 46. It's 46.28, but let's go to 46.30. 46.30. It's obviously very bullish. And notice, by the way, for the pattern in play, just so you guys see here, both Andre and I put in half size. The reason why is because when you're going counter trend, you gotta, you can't expose yourself. If you're gonna, whenever you trade counter a trend, you want to make sure you're taking smaller positions at all times, right? Like, for example, if stocks came back down to here to 4,500, okay, I would actually think that you want to be long down here. I'd be more aggressively long down at this level personally. Okay. But anyway, the next level of resistance beyond this is 47.22, which, I mean, I'll write it down. I don't think we're going there today, but hell, you never know. Euro dollar. So the euro, big rejection last week. We should be right up to resistance here. I'm going to write down resistance as being 115.90. Remember, that's that low right there. So I know we're getting pretty close. And support is 115.20. 25 actually. Still bearish. By the way, in the event that we get back up, well, I'm going to write down resistance as being 116.20 as well. So sterling. So we just had a nice little bounce back in the sterling. Coming out of that wedge, we're still bearish while we're below 138.30, right? We challenged the underside of that trend line, as we talked about last week, really failed up there. We should have right now, we should have intraday resistance at 137.10. So 137.10. And for some reason, if we get back up to 138.30, I mean, I'll just write it down, but we have to stay bearish. Yeah. Support, 50% retracement comes in at 136.20. The 618 at 135.70 seems more of a logical target, just because we have a nice little confluence, horizontal supports there. So I'm going to write down, I'll write down both. I'll just write down 136.20 for now, but it's not great support. Aussie. So Aussie's still very strong. We have the RBA tonight or tomorrow morning, right? So that's, in my opinion, the RBA is going to put us right here at 75.70 or down here at 74.70. And you guys know I should write this. No, 40. It's right here, right? Right there. And this support right here should be intraday support. That should be resistance up there. I'm assuming that we're going to stay in this range between now and the RBA, which is obviously upcoming. So, yeah, I wouldn't get too aggressive with the Aussie right now. So 75, 70, right? I'm still short some Aussies. So just Just so you guys know, I don't mind being short. It's just, it's just bouncing around here. Kiwi 72.12, and then we got double top setting up. So this is the neckline, really critical. Excuse me, I just hiccuped. Whoa, sorry about that. 71.30. That sets off a double top, right? 72.12. That's key resistance. Brand says gap up on SPX. Yeah, but you're watching the futures, right? They've been coming off all morning. I mean, since we've been sitting down here, I mean, the S&P's been coming off since, heck, right as we hit new highs, right? I mean, yeah, we're gapped up in price, but that's because that's where the markets were at overnight, right? Gapped up, but we've been sliding for the last couple hours. So, sorry, getting back into analysis. Dollar CAD. So dollar CAD still capped, and it's interesting. Dollar Canadian last week. I mean, I still think we're building like this rounded bottom here, which means support still at 123, resistance is at 124.30, but we're holding up pretty well considering. The Bank of Canada action last week. I mean, I'm not long dollar CAD, and I still think we have to stay bearish while we're below this 124.30, but I'm giving you the buts, but it's holding up pretty well. Swissy 90.95, bearish while below 92. So basically 90.95 is support. And, I think ultimately we're still range bound, but I am surprised that it's not, the Swiss pairs aren't up like the yen pairs are. And as Ryan mentioned earlier on the F.A.C.E webinar, US dollar, Norwegian krona, big resistance. So we were looking at this, previous support acting as current resistance, as stuck like a gymnast at the Olympics, stuck that landing right there. So that means that 846 is really good resistance. Really good. That's really good, right? Really good. Support 828. Notice this US dollar Swedish krona. That was the chart of the day from a couple of days ago. ABCD worked out pretty well. I didn't get long because I'm playing the dollar in other ways, but if you guys did, congratulations. Dollar MEX. Now this is one that is surprisingly strong. I got out of my dollar MEX last week on Friday at the 618. I got out of my dollar MEX here on Friday, right there. And I bought it like somewhere down here. Forget. But I was playing the dollar MEX on the long side. I kept my Euro MEX, which again, I'm kind of floored that we're where we're at, but it's good. Nicholas said, "Hey Blake, are you adding to Euro short this week?" No, I'm not. I don't have any Euro dollar short. I'm actually short Aussies, but I'm not short Euros. So the answer to that question is no. I still think, because remember, I shorted it last week. I shorted it at 116.75. I closed it like 116. I want to say 40 or something. I didn't make very much on it, but I I did not expect that big of a move. Let's just, I'll throw that out there. I had zero expectations of this happening on Friday. That was the last thing I expected. I expected to move lower. I just expected this to happen. And so I'm like, oh, as we're approaching the support, I'm like, oh, I'm going to go ahead and close out my short like an idiot. Anyway, so yeah, because I was, and I still am, I'm long the dollar against other things. So it's, Nicholas says, I'm still short for there. Good for you. My goodness. That's one of the problems that I have when I play too many dollar pairs in one direction. It's like, okay, I got to take some off. And when I'm profitable in one, I'm like, okay, let's remove that one and I'll keep the other one so I can play a little catch up. And yeah, anyway. Okay, back to it. Dollar yen, dollar index, dollar yen, dollar index, dollar yen. Dollar MEX. Oh, I don't think I wrote down the levels. No, this is the one that, yeah, like I said, I pulled it off last week, but 78% retracement at 2073 should be support. Any dip now back to here should be really well supported. So if you guys really want to play it on the long side, wait for a dip back down to 2052. Was it 2074? 2074. I'm long some Rand, by the way. I think this is a big breakout, personally. Dollar yen. So that's not working. That is not the case. Let's just go ahead and remove that for now. Broke that trend line there. Let's get rid of that. It's irrelevant. I think we just have to write 113.20, as you guys know, same as last week, but now we're going to put an asterisk because it's extremely important. 114.70, and it's bullish. There's no reason to be bearish dollar yen, not while it's above the 13.20. Oh, S&P is coming down a little bit here. NASDAQ's coming down. Are yields rallying right now? They are. That's why the NASDAQ's getting smoked. Okay. Dollar index. So this is, if you guys missed the week ahead video, I meant to mention this to Dale. This is what I think is happening. We just got a bull flag developing ahead of the Fed. Which also means that's really significant resistance today, 94.30. Support. I mean, I don't know if I want to give it all the way down. I think we can get further than that. That's why I'm hesitating at this moment. What the heck? Okay, there we go. The 38% retracement. It's at 93.90. I guess we'll write that down. I'm going to keep us in range. Everything here is in range. Okay. Stocks. Let's look at gold, silver, and Bitcoin. Okay, so here's gold. I know gold's very disappointing for a lot of people. I mean, the price action, I know I continue to say this, but it stinks. If you're bullish, it's got to be the most frustrating thing on the face of the planet right now, I would think. Let's get rid of this one. It's not relevant. Okay, so the underside of this trend line comes in at 1792. I'm going to write it down because it looks like that's holding for now. And support's going to be 1767. So let's go 1767, 1792. I'll also write 1810 because that's obviously huge. I mean, we've struggled up there, but I'm going to write down resistance first of all. 17, well, actually it's 1793 by the time we get up there. Okay, that's it. Silver. Let's get rid of that. So silver, 2350, 2480. You guys have fun with it. You guys have fun trading that. I am not going to trade that. Bitcoin. Uh, 64K. And we're going to write again 58,000. Okay. So we're going to go 58K. And what is it? What is that spike up? 56? 56.5. So yeah, I'm just going to write 58,000 and 64,000. And we're going to keep it bullish until we actually start seeing it, move lower into, below maybe this channel. So I mean, we got a lot of work to do to turn it bearish on Bitcoin, which, so in other words, it is not bearish right now. It's bullish. Okay. So here's your bias chart. I'm going to leave that for you. And Steve and Stelios should be here. Good morning, gents. Happy Monday.
Happy Mondays. New month.
How's the 1 week? Hey, Steve, how's the 1 week of time change going to affect you guys? Anything disruptive?
Slightly better for me for timing because I get my girls from the school bus just after this webinar usually. So now nice. Today I'm not in a rush.
So you guys fall back.
You
guys fell back an hour.
Yes.
Again,
which means we had 1 extra hour of sleep on Sunday.
Yeah, that's great. Yeah, no, that's great. And so just so everybody knows, for those of you that are newer to the ForexAnalytix community, and maybe you're newer to me, I actually live in Arizona, which is one of the very few places in the world that does not change their clocks. So every time change, it for my entire life, it's so confusing to me. It's like, because I spent my whole life as a youth, my whole like childhood, never changing clocks. So it's something that's so foreign to me. And even at the age of almost 50, it still is very, very foreign to me. So I always get confused. I'm like, so do you spring back and you fall forward? And they're like, no.
To be honest, the concept is a little bit weird, isn't it?
It is. So I was getting my one of my vehicles getting the emission test this weekend, as I was taking my son to a friend's house, my 17-year-old, and we had like, and it's a long wait, it's like 30 minutes in your car. We sat there for 30 minutes and talked about daylight savings time for 30 minutes. So anyway, that shows you how tantalizing of a conversation that it is to be my son having a conversation with his dad about daylight savings time.
The fun part is that every year they claim that it's going to be the last year that this happens, and I've been hearing that for like at least 3-4 years now.
How much? I mean, how does it throw like all of our technology and everything into a big, you know, like kind of like the 2000, the change of the century. I mean, does it throw the market into or throw like all of our computer systems into a big?
No, not at all. Actually, everything is baked in a long time ago. I'm having
You're a programmer. You know this.
Having lived with that, I'm totally in favor of the daylight saving time. I just can't comprehend why the two sides of the Atlantic can't agree on doing it the same day in both cases. I mean, this seems so weird to me. I mean, sure, there are benefits in having it. Why can't we agree on the same date?
Yeah, I think it was George Bush
blame it on Bush.
I am. But hey, we got to get to the markets. I'm gonna let you guys take over. So everybody's waiting for you to discuss markets. So I'm gonna let you discuss markets. So
thank you, Senor Blake.
All right, I'm gonna pass over to you guys. Good luck, and I'm gonna go adjust my clocks. No. All right, talk to you later. Bye-bye.
Mate.
Thanks. Okay, so big week. We have few central banks this week. Obviously, the Fed is a big one. Bank of England, RBA, and the payrolls at the end of the week. So theoretically, we have lots of potential reasons for risk to reverse. But until they come, I wouldn't stand in the way of stocks or the dollar. Actually, no, the dollar is rallying the last couple of weeks, actually. But I think the trend is still stocks higher, dollar lower. But as I said, the Fed could, give us reason to think otherwise. Until then,
perhaps we might also see a little bit of position squaring ahead of all that event risk. So I have to tell you, Stelio, although you know very well that I'm not bearish stocks in any shape, way, or form. I find kind of interesting that ahead of all this event risk, we had this gap higher exactly at the 127% extension of the last corrective move in the case of the S&P. By the way, more or less at the same level, we have the 200% extension of, you wouldn't have guessed it if I told you in advance, of the COVID sell-off. So since the COVID sell-off, we've already rallied twice that deep, right? Just imagine that.
Yeah. Wow.
Yeah.
Yeah. Yes, but I think you're right, because equity longs have been doing very, very well, and this week's Fed is really the first proper risky sort of high risk event for equities. Obviously, COVID was a surprise. It wasn't something that could happen. It was a black swan. But now this could be. If we get a hawkish Fed, theoretically, stocks could be trading a lot lower. So theoretically, I think you're right. We will get some squaring of positions. So that might mean stocks might drip lower into it. I don't know. In principle, nothing's changed for me. Yields okay. I'm trying to go a little bit higher today, but there's still a 160 in US 10 years. So nothing has changed. Yields are very low, and money is cheap. And where does money go? If you want to gamble, or not gamble, if you want to risk, well, it goes into cryptos. If you want to gamble, and if you want to take on risk, it goes into stocks. So,
yep.
I wouldn't go against it. Again, this week is a very special week, so I would keep my trading low and tight, very tight, and not take any stupid risks. Unless you really have a big confidence in the trade you're putting on. But markets are pretty quiet. The oil is again. We wrote on the weekly report last weekend that it was 9 weeks in a row of positive for oil, which is crazy. And the 10th week, which was negative, was something like 1% or something like that. So oil is just continuing. And yes, OPEC are discussing. I think we are looking at 400,000 barrels of increased production. But still, it's a commodity that's for various reasons, supply cannot meet demand, so it's going higher until things reverse.
The trend has definitely not broken. We saw that one day sell off that week, last week, but then we found support at this tight ascending channel. We rebounded from there, and today we seem to be starting the new day, week, and month definitely on a positive note. We're currently testing the previous multi-year highs on a closing basis, because early last week we spiked higher than where we currently are. So in all honesty, there is still absolutely no technical signal that oil is breaking down or anything.
I agree, 100%.
We're seeing some divergences clearly, and some stuff like that, and clearly chasing crude oil up here after it has seen practically no sell-offs in a few months now. It makes no sense, but on the other hand, it's too strong to fade. Now we break through this channel, we can easily just backtest that 77 area, but that's an if, right? You can trade on ifs. I mean, let's first see that happen, and then we take it from there. What else did we have, Stelios?
Not much. We have ISM in about 8 minutes. Metals are trying to rally, but really, I'm not gonna treat any of their movement today, tomorrow as being significant because of the Fed. And gold has been trying to has been rallying above 1800 on a few occasions, but it closes below. So that's the first hurdle. And then I think
a lot of noise here in the market.
Exactly.
A lot of noise.
And I wouldn't trust any moves really ahead of the FOMC. I really wouldn't.
Yeah.
But nevertheless, they're trying to rally today. Silver is above $24 again. And
natural gas, by the way, third consecutive down day, which increases the possibility of the scenario we're talking about since several days ago, that we might be unfolding some kind of a bigger corrective move here, like a triangle. In any case, I still think that we'll probably spend a little bit more time consolidating here, but the way we are correcting the prior gains seems constructive to me. So I think that eventually we're breaking higher here as well. So yeah. Anything else, Stelios? Good day for, by the way, good day, an indifferent day for gold and silver, as you mentioned, but good day for platinum and palladium. Yeah. Platinum holding this ascending channel and quite a big rebound today, more than 3% positive on the day. So it holds within this blue ascending channel. Palladium needs to do a lot more to point higher, but quite a nice move out of this pennant. So the scenario that this corrective move might have at least one more leg to the upside seems like a very probable one. Now, cryptocurrency is not doing much, but I insist, just by looking at the charts, that they've done nothing wrong. Bitcoin seems to be.
Did you read the? Sorry to interrupt. Did you read? Because I'm going to forget. Did you read about that new coin Shiba Inu, the dog?
Yeah.
Did you read the one $8,000 investment last year is worth something like $5.7 billion?
Yeah.
I mean,
okay.
It just boggles the mind.
It does.
I was discussing with some friends, and I said to them, "Look, you have to be really deranged not to sell some, because apparently they haven't sold any of it.
Yeah, you indeed have to be at the range. Honestly.
You know, when you hit, 100 million, come on, you have to sell something.
The thing, Stelio, is that this kind of thinking that you have will never make you a billionaire. You know what I mean?
Yep, I know.
Same here, because you're thinking like an investor, and the person that would invest, first of all, what are the chances that the person that invested, let's say, $5,000 in a completely unknown, ridiculous shitcoin of the many out there, and I say many out there because they've surpassed 13,000. Just think of the number a little bit, right?
Yeah.
More than 13,000 of them.
Actually, our friend FXB boss here says that wallet didn't have any transactions past 8 months. So either the owner is dead or he's lost the keys to his wallet. I mean,
which is a likely scenario, to be honest. The latter, I mean,
could be.
Yeah.
I mean, no sane person would just let it run like that. anyway.
Yeah.
Just,
plus, you're either like the winner of a jackpot in essence. You're so lucky, or which is a more likely scenario in my mind, you're the kind of person that put $5,000 in, 100 of those. You know what I mean? And in many occasions, and you never hear about those, you lost your money on all of them, right? Some of them get lucky, of course. And that's the stories you hear about. Oh, that guy put X amount of money there and blah, blah, blah. And then the obvious question is the one you asked. I mean, who makes that kind of money out of nowhere and doesn't cash out, at least a serious portion of it? Somebody that doesn't understand the concept of investing, right?
Anyway,
so to have the mentality to make so much money from so little, you're in general the type of person that's more likely to end up a degenerate gambler than a trader or an investor.
Yeah. So Bitcoin is still on this descending channel. Corrective descending channel, right?
Yeah. I mean, it totally has corrective characteristics. The way it depreciated, the way it's holding up, the way it rebounded here last week, that candlestick. And if you combine that with the looks of Ethereum, because Ethereum had this big neckline for this cup and handle formation, we broke above it, we literally tested to the dollar, the all-time high. We pulled back a little bit, back tested 3-4 times the neckline as support. We held in every single instance, and now we're back testing the all-time highs. I mean, I really don't see anything bearish on either of these two charts, right? So the path of least resistance remains higher until proven otherwise, undoubtedly. That's why crypto traders are called degen apes, which we are, he says. Lol. Okay. So let's see what else we have today. Yeah, I wanted to do some catching up with a trade we have been talking about for quite some time, which is the crosses. Euro Aussie, Euro Kiwi. Look at how beautifully those have been working, right? Euro Aussie, Euro Kiwi. Now, pay attention to Euro Kiwi, because Euro Kiwi not only has broken several days ago from this clearly corrective pattern, and I kept repeating again and again for months that, listen, I don't know how long it's going to last, but these moves we're seeing unfolding in these crosses have purely corrective characteristics, and eventually we're breaking lower. Now, we broke lower in the case of the Euro Kiwi from this corrective formation, but look at this corrective formation, which dates back to 2015. We are just now breaking below it. So you understand that you might be looking at the short-term picture here and think like, oh, damn, I missed US construction spending a lot lower than expected. The expectations were for positive 0.5%, and the actual number came at negative 0.5%.
And ISM manufacturing PMI slightly better than expected. So
yeah,
prices paid a lot higher than expected.
What a surprise, Stelios. Yeah, what a surprise. I would have never expected that. So you might be looking at the short-term picture and thinking, damn, I missed my opportunity shorting the breakdown over there. But then you zoom out and you realize that if we are actually on our way lower, there is so much more to go, right? So much more to go. So keep that in mind. Euro Kiwi just on Friday, attempting to break down from this formation. Now, if you look at the equivalent pound pairs, here's the pound Aussie that has broken through this corrective ascending channel. Keep in mind that we have a longer term ascending trend line support, but there is some distance to it. And here's the pound Kiwi that has broken through this and is dumping lower, sliced through the 61.8% fib. So I really think that these moves are the real deal. I don't think this is noise. I think because, I kept saying this is a corrective rebound, this is a corrective rebound. And the way we've been moving lower now is clearly different than the corrective patterns we had. It's quite a lot impulsive to the downside. So keep that in mind. So in my opinion, you should not be trying to fade this. Yeah, at some point there's going to be rebounds on the way down, right? But I think this is the real move. And, if anything, you should look for levels to, get a position in the direction of the trend and not against it. Yeah, as it seems, by the way, we're still pushing lower from this gap higher. That's going to be interesting if we find a high at this confluence of resistances on a Monday, first day of the week, that is obviously, first day of the month. It's an interesting timeline. Let's see how the price action is going to unfold today with equities. Clearly, if we do see a move lower in equities, that should help somewhat the dollar. The dollar, speaking of the dollar, still in the middle of nowhere, right? I mean, we have the DXY here moved back quite a big up day on Friday, but technically speaking, we're in the middle of nowhere, right? We're back again, more or less in the middle of this roughly 93.50 to 94.50 area. So, still in wait and see mode. Looking at the commodity currencies, they look decently constructive. But then if you look at the euro, it is definitely very heavy, right? Might have broken through this ascending channel, which would point to a lower low. Looking at the cable, quite a development here, right? Back within the broken triangle. So yeah, the euro and the pound look a lot worse than the commodity currencies at the moment. But the combination of the two of them, meaning the euro and the pound, are like something like 70+ % of the DXY index. So, if the two of them move in one direction, more or less it's, it doesn't really matter what the rest are doing. Let me see, was there anything else? Oh yeah, USD yen. USD yen, in my opinion, likely breaking higher once again. We crafted this little pennant. Clearly, only a bullish interpretation can have some value here given the prior move. And we seem to have broken out of it and testing the previous highs. The next upside target is at 115.23. I really don't yet see any reason why you would want to fade this. And that is why all the yen pairs remain, if you look at them, quite bullish also. I mean, all of them seem to be producing bullish continuation patterns like bull flags, so on. So yeah, that's it. Quite an important week. Event risk might end up saving things one way or the other. Now, ahead of the events, assuming what's going to happen is a foolish exercise, in my opinion. I have to tell you, though, that the vast majority of the assets are well positioned for dollar weakness. Now, is that what we're going to get? Hard to tell. But the market, I think, is better positioned for dollar weakness. Let's see what we get. Brock wants to have a look at WIT, SZW. He says, let's have a look at it. Whoop. There we go. Quite a healthy move higher, which admittedly has started losing momentum. Notice that high over there came with the RSI being above 80. Last two higher highs barely testing 70. A little bit troublesome for the short-term outlook. It looks a little bit fatigued. So I wouldn't really be surprised here. If we got something like this, a little bit of a false break higher, then a pullback, then some kind of a continuation. But for the time being, other than some divergences, it has done nothing wrong, right? So remember, we have a sequence of higher lows that dates back to when we actually found a low, right? And higher highs. So admittedly, we've been in a sustained uptrend since, when did we bottom out actually? We bottomed out in 2016. Yeah, the process initially higher was extremely slow, and we in essence accelerated since summer of 2020. Yeah, so very, very hard to be bearish. Very hard to be bearish. But on the other hand, as I said, some divergences here, yeah, make me a little bit skeptical. Although if I had to either buy it or sell it, I would buy it. No questions asked, right? Between the two of them, there is no question in my mind. It's a buy. And I think it's headed higher, eventually much higher. It's just a matter of if we're going to see a decent pullback soon before it goes higher or not. That's the only thing I'm questioning, nothing else. Anything else? My pleasure, mate. Anything else, guys, gals, you want to look at? By the way, let's see what the Tesla gapped higher, also nice, above the 161.8. So we've now checked that box as well. Still, it's beautiful, right? Tesla receives an order for cars worth, I think, roughly $4 billion. And that's a revenue, not... Oh, he has written to me that he has to go pick up the girls. They receive an order that's worth roughly $4 billion. I mean, what percentage of that can really be profit? 10%, 15%, 20%. I mean, let's say best case scenario for them, they can make a profit of 1 billion out of them. And they get a market capitalization increase over 50 billion. Go figure out. I mean, this market is just pure lunacy. At a stock that's already overvalued at levels that would make stock traders, Nasdaq stock traders of the 1998, 1999 period feel ashamed. whatever. Anyhow, crazy market. But this is what you have to play with, and you have to go along with it. Trying to fade madness is not a trading strategy. It's probably a strategy to get yourself in the poorhouse quite fast. Okay, guys, girls, don't forget to join Blake in 2 hours and 20 minutes from now. And I'll talk to you again tomorrow. Have a wonderful afternoon. Bye-bye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.